Hello, this is the tradesight Stocks and Futures Economic Roadmap and Index Preview for the week beginning April 15th, Tax Day 2013 here in the U.S., ending Friday the 19th. A couple things to focus on first of all this week before we take a look at the indices and then look at all the news that's coming out. We always like to talk about what the main focal points are going to be for the market. There are two this week. Number one, we have options expiration for April. This is not a triple expiration. Friday should be a pretty light day with options expiring on Friday. It's Wednesday or potentially Thursday that we're most likely to see an options unraveling move if we get one. That's the wider range day of the week, and we'll be monitoring that as usual and walking traders through it in the trading lab as it happens. If it happens, it usually does for options unraveling, but that means Friday will probably be a light day. We also start the core 8 days of earnings. These are Q1 earnings here in the U.S. now that we're in April. The core 8 days of earnings start on Tuesday, so it's really from this Tuesday to the following Thursday. Call it the core 8 days because you've got Tuesday, Wednesday, Thursday, Friday, but it's really Tuesday, Wednesday, and Thursday where most of the earnings come out. Then you've got Friday and Monday the following week, again Tuesday, Wednesday, and Thursday, and ending that day will get us out of about 90% of the big earnings that are due for the quarter. So we'll be looking at that. That tends to make for a slightly different type of market. Get a lot of gaps from responses to earnings. Even stocks that don't report obviously are likely to gap if something else in their sector has surprises with earnings coming out. So it's just a different environment for traders. You get a lot of late day moves based on rumors on stocks that are due after the bell or before the bell the next morning. So we're kind of got to be on alert for the big stocks that are reporting on any given day after the close and adjust our trading accordingly. And keep in mind when you've got that window between this Tuesday, Wednesday, Thursday and the following Tuesday, Wednesday, Thursday, and you got options expiration slammed right in there on Friday. Friday's probably going to be a really dull day. I'll only trade the first hour or so, and then the following Monday could be and then we get back to it for those Tuesday, Wednesday, Thursday earnings. So my focal point is really going to be, I would expect things to be a little light on Monday and Tuesday simply because the market's going to be looking at and wondering what's coming out in those first earnings numbers that come out in Tuesday. They really begin in earnest. And then Wednesday and Thursday. It'll be a little slow there, but Wednesday should be the day you'll get some earnings out of the way. You'll have a reaction to those earnings, and then you've also got that potential for that options unraveling move. So we're definitely going to be on alert for Wednesday and Thursday as the better trading days of the week, in my opinion. And just to kick it off on April 15th, which is Monday. Before the bell Monday, you've just got Charles Schwab and Citigroup are the big ones reporting before the bell, not much after the bell. Then you get Goldman Sachs Tuesday before the bell. After the bell, though, it really starts to kick off with Yahoo and Intel. So those are your big tech stocks that started off, and then we keep going from there. So we will have a lot of earnings coming out this week. Be very aware of that. Microsoft and others later in the week as well. Google on Thursday, that's a big one. Now, in terms of the indices, here's the S&P Daily Chart Index. Right here on the right side on your screen, and you can see that again it's just been a straight climb. We've ignored a couple of 13-bar seeker sell signals on the daily chart, which is truly amazing if you ask me. And we'll take a look also at the weekly chart, and look at this gets you. I mean, again, we blew off that 13, and remember we talked about it when this happened. You get that risk line, that pink line off the 13 sell signal. If you break it quick, it usually leads to a squeeze in the market. That's definitely what we're seeing. Meanwhile, here's the Nasdaq 100, the NDX daily chart, and you can see it's potentially about to make a new high as well, a breakout here on the weekly. Back it up to the daily. That's a nice cup and handle formation. Remember, this thing's been so flat month by month here so far this year. Some of the tightest range stuff we've seen. It's a little push up and now sort of a bull flag formation the last 2 days. We're staging right under that 2880 area. That's a breakout point. We're 8 bars up, make it maybe 9 bars up on the seeker count. And so we'll be looking to see if that's 8 bars still. We'll be looking to see if this is a breakout. Obviously, it's a lot of construction to push us higher. So, again, it's not our job to look for tops in the market. There are obviously signs of some exhaustion we've seen, but we've shaken them all off. And I think the main point is when you look at that S&P chart, let's go back to it, you just look at this trend line from here to here. I'll just draw this line right here, right? You can see this nice trend line that's very clear. We've not broken it. That's going to be the big key. You can look for topping signals all day long, but we need to break that uptrend line. The uptrend line is very specific. It's now 4 points. It's in place. When you break it, that'll be one. That could lead to one push, then a bounce back up to retest it. If you don't get back above it right away, the next rollover could be really the confirmation to the downside. It'll be the first time in a while that we could really get a downside move. So we're looking for it, potentially there, but so far nothing has happened. So we stay focused on what's going on in the market intraday each day. Quick look at Apple. Really hasn't gotten off the mat yet. Still holding near the lows this week, down here in that 420s range. Same thing. Google didn't do much this week. Been drifting a little lower. Amazing how it finds support at this key static trend line, this red line. Remember, that's only a tool. That's only a line you've got if you're with TradeSight and you got the Seeker tool. It's not based on any specific support or resistance point. It's based on this 9-bar move over here that we got as a startup or a setup phase. That's the low of that move. So look how we came right back to it and settled on it, didn't get a close below it, and now I've sort of held that area. So right now you've got Google between these two levels. Let's take a look at Netflix, for example, which has had a little duck and moved back up this week after breaking under that base up there. Really hasn't been quite the mover it used to be, except for that gap that you see back there on the chart. And here's Amazon, also heading higher. But note that Amazon had this 13 sell signal back here, which was very on the money, and the pink risk line has not been violated. You've not gotten a close above it and then take out the high of that prior bar since we had that line. So that line's technically in effect, but I would say at this point, if you took the 13 sell signal, you've had plenty of opportunity on this. So we'll see if we can break out. Obviously, if the Nasdaq breaks out, you would expect something like Amazon to go with it. I think there's a lot of focus right now, of course, on the sequester and whether or not this is going to get worked out in some sense before any of the employment numbers get worse. And obviously the market seems to feel like it will, although the volume has been light. There's a lot of uncertainty in the market about it. I think it's already dragged on more than anybody really wanted to see. But if they can get this thing worked out now, it's only going to squeeze the market higher, of course. Let's take a look at economic data coming out this week. And here we go. Monday, no big deal. Empire Manufacturing, net long-term tick flows, and the housing index number, no big deal. Tuesday is the big one in terms of data, which is the CPI. It's one of our big three every month. Housing starts and building permits, industrial production, capacity utilization, all of that out before the bell on Tuesday. Wednesday's MBA mortgage index, crude oil inventories, and the Fed beige book in the afternoon. Thursday is the Philly Fed continuing an initial claims before the bell with leading indicators at 10 a.m. Eastern Time. And the natty gas. There is no data on Friday, but you do have options expiration on Friday. So again, things to focus on. Earnings start on Tuesday for 8 days. We're in a different mode from a trading perspective. Got to be a little more cautious. We've got options expiration, which means Wednesday or Thursday we should see that unraveling move. And of course, we're going to have to be aware of gaps and such from the earnings that are due. And you've got CPI on Tuesday. Hope to see you in the lab. We can walk you through a lot of this. If you're not already getting these directly, make sure you take a trial of our service by hitting the Get Started Now button on our website. That'll get you automatically put into the weekly emails that go out where we can send these to you directly so you don't have to come looking for them. But otherwise, we'll see you in the lab. Have a good